Welcome to this explainer. Today, we're going to pull back the curtain on the mechanics of Africa's largest economy. We are diving into the complex, but honestly really fascinating world of Nigerian tax administration and jurisdictions. If you're doing business in Nigeria, or even just thinking about it, understanding how this system operates is absolutely crucial. 39. Across the various tiers of government in Nigeria, there are exactly 39 legally collectible taxes and levies officially on the books. It's a massive landscape of compliance, and knowing exactly how this whole system operates is essential so you don't get caught off guard.
Okay, let's dive into this. With 39 different taxes floating around out there, the ultimate question becomes, who actually gets to collect what? You see, the administration of taxation in Nigeria isn't just handled by one single giant mega agency. Instead, the power is vested in various authorities, and it depends entirely on the specific type of tax and the type of taxpayer. It's like a giant puzzle.
So, to make sense of this bureaucracy, here's our roadmap for today. We'll start with the foundation, the 3 tiers of tax. Then we'll look at the federal giants, followed by state and local operations. After that, we'll do a full breakdown of the taxes themselves, and finally, we'll cover registration and tax appeals. Don't worry, we're going to make this super clear.
All right, let's kick things off with Section 1, the foundation, 3 tiers of tax.
The easiest way to think of Nigerian tax administration is like a 3-layer cake. You've got federal, state, and local. Now, there is a golden, foundational rule of jurisdiction here, and you really need to remember this one. If you are an incorporated company, your primary tax master is the Federal Inland Revenue Service, or FARS. But if you're an unincorporated entity, say a partnership or just an individual, you answer to the State Board of Internal Revenue right where you reside. So corporations go federal, individuals and unincorporated bodies go state. Simple as that.
Moving right along to Section 2, the federal giants.
Let me tell you, the federal government takes its tax collection incredibly seriously. The Federal Inland Revenue Service isn't just run by a few tax officers in a back room somewhere. Its management board is a total heavyweight team. You've got an executive chairman, representatives from all 6 of Nigeria's geopolitical zones, and major power players like the governor of the central bank, the comptroller general of customs, and a rep for the attorney general. It's a highly integrated cross-agency powerhouse completely designed to administer taxes on the profits of incorporated companies across the entire nation.
But here's the catch. Because we have state and federal systems working at the exact same time, we need a bridge to keep things running smoothly. Enter the Joint Tax Board, or JTB. Think of the JTB as the unifying glue for tax policy across the country. It brings together the FIRS chairman and a representative from every single state. Together, they advise the federal government on avoiding double taxation, they promote uniformity in personal income tax rules, and they can actually impose their interpretations on the states to ensure everyone is playing by the same rulebook. They're also the ones settling disputes between the different tiers.
Let's zoom in a little further on our map for Section 3, state and local operations.
Down at the state level, the State Board of Internal Revenue takes charge, and they are backed up by a technical committee made of experts. There's also a joint state revenue committee to keep the state and its local governments on the same page. But right down at the grassroots base, we have the local government revenue committees, or LGRCs. Now, there is actually some fascinating constitutional tension here. The Federal Personal Income Tax Act established these local committees, but a lot of local governments argue this breaks the rules of the 1999 Constitution. They claim local government administration should be dictated by the State House of Assembly, not federal law. So there's a real tug of war happening in the background.
Which brings us to Section 4, the tax breakdown. Now, what's really interesting about this slide is the distribution of those 39 taxes. You'd probably assume the federal government collects the most types of taxes, right? Well, actually, it's the exact opposite. The federal government only collects 8 types of taxes. State governments collect 11, and local governments, they collect a whopping 20 different types of taxes and levies. So the federal government handles the fewest types, but they are the massive high-yield ones. Meanwhile, the local governments are collecting the highest number of very specific, highly niche levies.
Let's follow the money here and map this out so you can clearly see your potential liabilities. At the federal level, you're paying the big hitters: companies' income tax, value-added tax, and petroleum profits tax. Down at the state level, you're looking at pay-as-you-earn, or PAYE for individuals, plus road taxes and business premises registration. Then, when you get to the local level, things get incredibly specific. We're talking tenement rates, slaughter slab fees, and even fees for bicycles, trucks, and wheelbarrows. Now, a few years ago, there was some major drama over this exact list of 39 taxes. Back in 2015, the Minister of Finance tried to issue a ministerial order expanding the approved list. They were adding brand new levies, like an infrastructure maintenance levy and a wharf landing fee. For a minute there, it looked like the list of 39 was going to get a lot longer. But then, in May 2020, the Federal High Court in Lagos stepped in.
The court delivered a definitive judgment and completely struck down that 2015 ministerial order. Their rationale was super straightforward. The Constitution gives the power to make and amend laws strictly to the legislature. An executive minister simply cannot amend a schedule of taxes by decree. The result? All of those newly added taxes were declared unconstitutional, null, and void. The list stayed strictly as what the legislature had originally passed.
All right, let's wrap things up with Section 5, Registration and Tax Appeals. When you form a newly incorporated company, you have to know that the clock starts ticking instantly. You are legally required to register with the FIRS. And your deadline? It's either 18 months from your date of incorporation or 6 months after the end of your first accounting period, and it's whichever of these two dates comes first. If you miss this, you are already on the wrong side of the law, for sure. The actual process to register is pretty straightforward, but it's highly formalized. You can't just casually stroll in. You have to submit a written application to the FIRS detailing the exact nature of your business, your registered addresses, and your appointed bankers. And crucially, you have to attach certified true copies of your certificate of incorporation along with your memorandum and articles of association. Only when the FIRS looks over all that and is fully satisfied are you officially on the tax registry. But hey, what happens when you and the tax authority don't see eye to eye? Well, you've got an ultimate safety net, the Tax Appeal Tribunal, or TAT. This is a statutory body made up of 5 expert commissioners, and here's the kicker, they have the power of a civil court. They can summon witnesses, enforce attendance, and review evidence. So, if you're an aggrieved taxpayer facing an assessment that you believe is totally unfair, this is your formal, legal avenue for dispute resolution. You aren't just left out in the cold. So, we've covered the federal giants, the state boards, the local committees, and the courts that keep the whole shebang in check. But before we go, I want you to look at your own ventures for a second. Do you know exactly which of those 39 taxes your business owes and to whom? Take this new mental map, apply it directly to your operations, and ask yourself, is your compliance truly airtight? Thank you so much for joining me on this explainer. See you next time.